Oh, aloha, everyone. Joshua Hayes at BigWaveTrading.com. All right, we're going to do another weekend's overall stock market wrap up. I didn't make one last weekend, but I got to be honest, the views are down. Not getting as many thumbs up, not getting any retweet shares. I told you guys I need to see some love. Of the 200 people that watched this video, I think only 6 thumbs up in the last video. Help me out, guys. It doesn't give me a whole lot of motivation to keep making these for free when nobody's reciprocating the love. Anyway, that out of the way, let's get to the market. I want to make it very clear. There is a dichotomy between the overall market right now. The NASDAQ is doing one thing. The rest of the market is doing the other. But is it healthy? Who knows anymore? This market hasn't really been healthy. The Fed is in complete control. I don't think it matters. It's just weird when you see what's happening out in the real world, the actual numbers that come in, what the market does. But I will admit, historically, markets bottom when the news goes from really bad and it gets less bad. And right now, all of the data, the macro data, is less bad than it was at the lows. So that is how stock markets bottom. But at the same time, when you have the Fed unleashing QE infinity, you just don't fight that. But the NASDAQ, it continues its very strong climb higher. But volume just continues to contract. Look at this 50-day volume average just continue to fall. And I tell you what, this is just a very weird looking chart. When you look at this move lower on that kind of volume and this length of a move higher on lower volume, makes you wonder, when does the next shoe drop? But in this new world, maybe the next shoe never drops. Maybe the NASDAQ index is now the safe index since we're moving online. So I would continue to recommend focusing on the NASDAQ QQQ related names, the stocks that are beating on the top and bottom line on the earnings reports, especially if they raise guidance. My personal methodology does the best when the monthly time segment volume of the indices are in uptrends and bullish. I'll show you that later on. Still not the case. And when the VIX is below 20, it does better when it's below 30, and we are back in that little area. So hopefully we get some good signals here. But until the VIX is back below this blue line, I'm not going to produce probably any stellar, amazing, oh my God, that one went up 500% in 3 days kind of gains, or 1,000% move over 6 months. As you can see, for long periods of times, the VIX likes to stay below 20, and it very rarely ever got above 20 and stayed above 20 unless we were in a bear market. And then all of a sudden you have this period. So kind of a wild, weird market that we have here, but, you know, it is what it is. So with the NASDAQ analysis out of the way on Telechart version 7, just want to show you now what I'm looking at in the other indices. The Dow Jones Industrial Average, see, this is what I would be thinking that the NASDAQ should look like. We're kind of really range-bound between the recent highs and the recent lows. We're below the 200-day moving average, above the 50-day moving average. Mixed bag. Doesn't look good, but at the same time, we didn't look good here, and look at what happened. So, you know, I have an open mind towards all this. Russell 2000, exact same situation as the DIA. We're in between these highs, these lows, the 200-day moving average, 50-day moving average. Doesn't look too pretty to me, but, you know, doesn't matter, I guess, whenever the NASDAQ is hitting new highs. Actually, then the SPY. This is the main index I focus on. Once again, between the highs, between the lows, we are above the 50 and the 200-day moving average, and it looks like we're about to have a golden cross. But with that being said, look at what the SPY did on Thursday. Okay, it's just another inverse hammer, right? Not a big deal. But look at the balance of power. It went red. I want to remind you that happened. That's not to say that this is going to happen again. It's not at all saying that. But remember, when the SPY was moving higher the last time, and as it moved higher with the red bop, what happened following those 2 sessions? Eventually, we started to get that big sell-off. So just keep that in mind. The SPY isn't too pretty. Nothing's too pretty. But the NASDAQ, that remains the safe index. So that's the index we're going to focus on. Now I want to switch it to Telechart version 20 so I can show you the internal indicators or the oscillators behind these indexes to show you what the short-term trend is looking like as we head into the new week. All right, everybody. I know this chart looks noisy, but trust me, don't worry about the moving averages on top. There's a lot of Fibonacci retracement moving averages that I follow, and that goes from anywhere from the 34, 21, 13, 9, And I believe that's the 5 I've added here. And then I have the longer term averages, which are the 200, 50, 100, and an ATR volatility stop. But what I want to really show is these indicators down here. Now with the SPY, we're just going to focus on the daily charts on this Telechart version 20. You can see the TTM trend momentum has shifted lower and we're in a loose squeeze. If we start firing out of this loose squeeze to a medium squeeze, which would be the red dot, and this TTM trend moves lower, odds are we are going to move lower. However, if we fire higher and we get above these highs, then I'd say the SPY is going to try to tackle its previous all-time highs. The TSV line is still above 0. The PPO oscillator is still above 0, but we have negative histogram on the PPO, and of course we already know about the BOP, but still TSV is higher still above 0, and so is PPO. So there's nothing of real concern yet in that index. The DIA, similar situation. We are not in a squeeze, but you can see the TTM trend momentum is moving lower. We're above the 0 line, but you can see that the lead line's below the signal line. Same here, histogram below 0. So short term, that indicates we do have weakness. So be on your toes. Don't be super bullish here. It's hard to be super bullish anyway whenever you only have one index leading the way higher. IWM, same situation. TTM trend momentum is lower in a loose squeeze. If we start to fire, that could mean that we pull back to these lows. Get out your Fibonacci retracement tool, draw it from the lows to the recent highs. This will give you a level that we could expect to pull back to. And or what you could also do with your Fibonacci retracement tool is draw it from those highs to the lows, and then also be looking at these levels to come into play as potential support levels. And remember, as long as the Fed is telling us that they're going to do whatever it takes and that they're buying corporate bonds, you got to be a buyer on pullbacks. This is just a short term. Well, let's see what happens. Now, if things start to get way worse, then obviously you want to step away and wait for some support to come in before getting long stocks. But the bottom line is, as long as the Fed's willing to do whatever it takes, we have to be looking to buy pullbacks and not expect a crash below the March lows. All hell's going to break loose. If it happens, it happens, but we just can't expect that. The TSV, same thing. Lead lines below the signal. Same thing on the PPO and the BOP, and the histograms are both below 0 on these two lines. And we'll see if the TSV gets below the 0 line on here. I don't think that'll be good. And then, of course, we have the QQQ. It continues to do its thing. This still looks good. The TTM trend momentum is still higher. TSV is still well above the 0 line, even though the PPO is weakening. There's nothing too drastic here, and BOP is pretty much break even. Now, with all that being said, I'm going to see, do I have my VIX chart marked up here? No. Okay, so with all that being said, we know about what I tell you about my own personal end-of-day methodology. Is there a way to make money in this market outside of my methodology? Yeah, Zoom. Remember, we had Zoom as a long position here. It's still moving higher. It's up 130%. But even let's say that you don't get Zoom via my methodology, well, then what methodology do you use? Well, once it hits a new high while the market's selling off, it's clearly a leader. You're looking at those earnings, sales winners, especially the ones that are raising guidance, the ones with strong relative strength, preferably 80 or higher investors business daily. And if you have a short float anywhere over 10, 20, especially 30%, you want to get long. This was a stock we went long a couple days ago, ANGI. Unfortunately, I did not get filled, but this is the power of getting long stocks that have a high short float. In 2 days, this thing just made a 16% gain. Congratulations to the few members that did get filled. Most of us did not. So getting back to the QQQ there, or the VIX, I just want to remind everybody for now, or actually we were looking at Zoom, sorry. Anyway, so the way that I would look at getting this is that once you get the breakout to new all-time highs on the pullback, whenever it gets, it's so messy here. Let me go to my other chart. It's a little bit cleaner. This blue line's the 21 EMA. Whenever it pulls back and it's at this 21 EMA, preferably when you're in a squeeze, this is not in a squeeze. Once it gets back above the 21 EMA, that's where you want to get long. Now, in this particular chart, it doesn't happen. I'm just showing you what I would be looking for. Once it gets below the 21 EMA and back above the 21 EMA, if it's in a squeeze, relative strength is 80, it's a leader in this market. That's where you look to get long. It's amazing, though, how many stocks didn't do that. For instance, ZM didn't do that. LVGO, I remember I started to watch it here. Didn't touch the 21 EMA here. Finally touches the 21 EMA here, though. no squeeze. But still, it just shows you that you could do it. It did work. I want to see if even DK&G did it. 21 EMA, no squeeze. The entire uptrend never came by. That's how I would play it, and it just shows you how few stocks did that. Look at NKLA. I remember when I put NKLA on my radar to do it with that methodology. Never once did it touch the 21 EMA. Now here it is at the 21 EMA, closing below it with heavier volume. It is in a loose squeeze. This is not a chart I'd be interested in because it's now breaking. Looks like it's rolling over. It's below the ATR volatility stop. But if it can reverse on heavier volume back above the 21 EMA, if it's in that loose squeeze, we get long in KLA for potential push to 100. We'll see. Now I'm going to go ahead and wrap up this video lesson with the TradingView chart so you can see the longer term month or daily, weekly, and monthly time frames of the time segment volume index that I look to really get me on the right side of this tape whenever I do decide to push it heavy with long positions, which I currently am not. So visually, these are my favorite charts to look at, always have been on TradingView, and that's because I get the background color. I don't know if you can do that on Telechart version 20, but if you can, somebody let me know and I'll do that. But either way, this is the QQQ. This is the leading index. This is the best looking index, so we're going to go back to it. But for now, the main ones that I focus on personally are the SPY and IWM. These are the two indexes that I always look at, and whenever they're green on daily, green on weekly, and green on monthly, especially, this is the most important time frame, this monthly time frame. When it's green, great things happen. Great things happen, especially with my long positions. I make a lot of money and I can size up into really good solid names. That goes for the IWM and the SPY. When it's green, great things happen. Make a lot of money on my end of day swing trade trend following long positions. When it's red, not so much. As you can see, we've been red in the SPY on this monthly time frame since September of 2018. We're almost going for 2 straight years. As you can tell by just looking at this chart, besides this period when we actually were in a bear market, 2000 to 2002, this is the longest stretch of negativity. If we look at the IWM on a monthly, it's clear to see we have never been bearish for this long on this monthly time frame, and that one switched in June, July of 2018. So it has actually been 2 full years of bearish monthly time segment volume. The first time ever in my trading career that that's been the case with the IWM, even though I wasn't really tracking it 2000 and 2002. I can tell you that since the 2003 rally where I made a ton of money, 2003 to 2007, this has been the longest period of poor performance. But see, bottom line is, it keeps me on the right side of the market. So even though the QQQ is doing good, this IWM, this monthly chart, not pretty. SPY chart, not pretty. And as you can see, we're widening out from the lead line to signal line. We were narrowing, now we're widening. We're doing that also on the IWM. We started to narrow, now we're re-widening. The DIA, same thing. We actually turned green for 1 month, but as remember what I told you then, the signal line's still trending lower. Here we go again. We're back to red. Now the QQQ, we're green. Green is good. This is why I say focus on these stocks. NASDAQ, QQQ related, go ahead. If you're in a squeeze, you're above the 21, the 9, 21, and 34 are stacked on top of each other. 50's uptrending, 200, 100, whatever is above it. That's fine. But for the rest of the market and for really pushing size and like speculative long positions for more than intraday time frame, this just is not that point in the game. So this is the monthly, the QQQ. It's the only good looking one. But as you can see, every other one is red, 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 red. DIA. Uh-oh. There we go. Let's pull it back up. Little hiccup here. There we go. All right. So now we're on the weekly time frame of the DIA. And once again, remember, monthly is the key. But then in the lower time frames, when they're all stacked, that's the best. When you have the weekly, monthly, and daily charts all green on the time segment volume, man, that's when I push 20% of my capital into every signal I get. But not right now. You already know the monthly. Now you see the weekly of the DIA. You see the weekly of the SPY. Oh boy, what's happening here? TradingView is having some issues pulling up these charts, but here's the weekly of the SPY. So we'll just keep it on each individual index. And then here's the daily of the SPY. So red, daily, weekly, red, monthly, red. Keep it simple is how I always like to tell people. Monthly IWM red, weekly red, well, weekly green, but still, as you can see, there's no separation, kind of flattening. Daily red, no good. The DIA, red, weekly, red, monthly, red. Keep it simple. Don't be a hero. QQQ, as we've already seen, monthly is green, but narrowing. Weekly, red, daily, red. And I just want to also show you something. Kind of breaks out, gets a little extended, inverse hammer, sell off. Breaks out, gets a little extended, inverse hammer, sell off. Breakout gets a little extended, inverse hammer. What do you think might come next? So just keep that in mind as we move forward. We're still not lined up. If you're going to keep getting long stocks up here in this area, it's got to be your earnings, sales winners that are raising guidance, 80 or stronger relative strength in Investors Business Daily, and it's got to be NASDAQ QQQ related. You stick with those names, you're probably making money. You're doing better than me right now. But if you're looking to really hit the home runs, yeah, that's great. There's Angie's that are out there where we can make 16% in 2 days, but that's because the 60% short float helped us. But right now, it's more hit and miss, and that's how it's going to probably be until I can get some more green in the time segment volume. That's just the way it is, everyone. All right, so once again, if you enjoyed the video lesson, please show me some love, man. Without the love, it doesn't really motivate me to make these videos. It's a process. It takes some time to make these videos, and it could be always spent studying and reviewing the previous week's trading session. So show me some love, thumbs up, subscribe, ring the bell, leave some comments. Even if you don't like what I have to say, let me know. Love to hear from you guys. All right, have a great rest of your weekend, everybody. Great luck in your personal trading during the upcoming trading week. Aloha.